It is the last trading day of a big November for stocks. Equities on track for the best month that we've seen in more than a year. We got the latest reading on inflation, core PCE or PCE coming in line with expectations. The core number cooling compared to what we saw about a year ago of 3.5%. We want to bring in our next guest to talk a little bit more about this. We have Kristina Hooper, Invesco Chief Global Market Strategist. Kristina, it's good to see you here. So when you take into account what we just saw with this core PCE number ahead of the bell this morning and pair that with the rally, the excitement that we've seen over the last several weeks, do you think the market has gotten a little bit too excited in terms of pricing in a rate cut in May?
Well, I certainly think the market is excited, but I don't disagree that about the price cut. I think we're likely to see that, very likely to see that, even though the Fed is telling us, or most members of the Fed are telling us otherwise. They're incentivized to talk down markets because they don't want financial conditions to ease too much. So I think it's very understandable that we're getting this language. We probably will see some movement down in markets, some tamping down in markets. But the reality is that inflation is coming down. We are on the D train, and D means disinflation. And we are headed for, in my opinion, the start of rate cuts in the spring.
Okay, if we did see rate cuts in the spring, and I will say, we certainly do value these conversations a lot. We've just had Mary Daly coming out this morning saying that that's not on the table for them right now. Where and what data would the Fed have to look at and say it's so grim that we can't help but to cut rates?
I think that's an important question to ask. And I would argue that you don't have to have grim data in order to see rate cuts. In fact, Chris Waller, in his comments the other day, said that all we need to see is continued improvement in the inflation picture, and that would actually trigger rate cuts. And I believe him. I think we don't have to see any kind of significant deterioration in economic data. In fact, what we know is that the lagged effects of monetary policy are long and variable. It could very well take some time for bad news to show up in the economic data. So I have no problem with the Fed being proactive and reacting. Keep in mind, we just heard this morning that Fed policy is very restrictive. So to have some kind of cuts in the spring, once the Fed is well on its way to achieving its goal, makes sense.
Kristina, if in fact the Fed does end up cutting like you expect in the first half of next year, how big of a catalyst is that going to be for equities next year?
Well, interestingly, if we go back and look at the last 6 rate hike cycles and the aftermath, we saw rallies start when the tightening cycle ended. We actually don't need cuts to have a strong rally because the market discounts in advance what it expects to see in the future. And so what I think is going to happen is a situation where we see a strong rally now, growing global risk appetite, and we're likely to see some moderation in returns as we actually get those rate cuts, the start of rate cuts. I think that will be the start of perhaps a less positive market environment. It will still be positive, but I think what we're seeing now is going to be a pretty significant level of risk appetite growing.
Kristina, just lastly, take us into your strategy scope here. When you think about rate cuts, what is the top idea that investors perhaps should be considering or imploring if we were to see rate cuts initiate next year?
So that means that if we see rate cuts start next year, the market is discounting an economic recovery in the back half of 24, in my opinion. So what we're likely to see is small caps perform well, cyclicals, but my strongest conviction would be around emerging markets because historically they've benefited from the recovery trade. They've been a very significant beneficiary. So if all plays out as my base case suggests, I think emerging markets equities will be a significant winner.
All right, Kristina, always a pleasure to get some of your insights and analysis. Really appreciate kicking off the conversation here in the trading session with us here on the day. Kristina Hooper, great to get your insights. Invesco Chief Global Market Strategist joining us here this morning. Thanks.